Trump is celebrating Congress passing a major overhaul of America's tax system.
It's the biggest change to the tax code in decades. Many Minnesotans could see tax cuts, but others could see a tax hike because one of the most popular deductions is getting a dramatic cutback. Here's Pat Kessler's reality check.
It'll take a few weeks for the average Minnesota worker to feel the effects of the tax bill. By February 2018, lower tax brackets kick in, and you'll see a bump on your weekly paycheck. In 2019, families can deduct up to $24,000 for dependents, double the standard deduction today. But for many Minnesota taxpayers, this tax bill is fraught with uncertainty.
That's because Minnesota will lose an important tax benefit called SALT, state and local tax deductions. And losing that deduction could mean a tax hike for thousands of Minnesotans.
Here's what you need to know. Until now, there's no limit on how much state and local taxes you can deduct from your federal taxes. Starting next year, those deductions are capped at $10,000, and that's a big deal. In 2015, 881,000 Minnesota taxpayers deducted state and local taxes. That's nearly 30% of all the taxpayers in the state. Their average deduction, $14,500. And it's widely popular from north to south. In far north Roseau County, workers have good jobs making Polaris recreational vehicles. They deduct an average of $17,800 a year. Hennepin County, $19,000. Crow Wing, Washington County, all the way to southern Olmsted County at $13,500. Without that deduction, those tax bills are likely to rise. 80% of Americans will get a tax cut next year, but many of those tax cuts go away in 7 years. By 2027, 53% of taxpayers will see a tax hike. That's Reality Check.